What's going on, and welcome back to another episode of The Mortgage Mindset. I'm your host, Trevor Otsuka. I am a licensed mortgage advisor with Barrett Financial Group, and I lend on commercial, residential, private money for fix and flip, things like that. So, want to welcome you back to a show. Today is a solo show. We're going to dive right in. The format is we're going to run through a very brief market update, tell you a little bit about what's going on in economic data this week and then next week. And then I have a pretty interesting article today that's going to talk about trigger leads. So we will get into that. If you don't know what they are, I'll definitely explain that. So first, rates. Today is Thursday, December 26th. I hope that you all had a blessed Christmas and you're going to have a fun new year this year. So today's mortgage interest rates for a 30-year fixed on conventional, you're looking at 7.12%, 15-year fixed at 6.48%, 30-year jumbo is sitting at 7.33% national average. And then for FHA and VA, we're right at about 6.46, 6.47% respectively. So definitely rates have climbed up just a little bit over the course of the last 2 weeks. We talked about the Fed rate cut that happened on the 18th of the month, how the market reacted to that, and that the economic projections, which are also called the dot plot, where all of the Fed chairs make their predictions or their projections of where the federal funds rate is going to land over the course of the next 3 years. They also reduced their anticipated number of rate cuts in 2025 from 4 cuts down to 2. So that had an impact, and the bond market did not like that very much. So we had a little bit of an increase. Today we had a small rally, and that happened off of a 7-year note auction. So for this week, what's really happened? Not a lot. You had jobless claims that came out today. Came in a little bit under what was projected. And then 7-year note auction was really good. So that kind of rallied the market. We had a slight improvement today. Next week, because of New Year's, you have a half day on the market for Tuesday for New Year's Eve. And then the market is going to be closed on Wednesday. The only really big thing next week is you have jobless claims for December. That'll come out on Thursday the 2nd. And then you also have ISM manufacturing PMI for the month of December, which will be released on Friday, January 3rd. So that's what we got going on in econ data for this week and next week. And then we're going to dive here into this week's news article headline. So this is from Housing Wire. Again, I will include the link for this in the YouTube description below, and then also in the podcast description, wherever you're listening. The title of the article is Mortgage Groups Gear Up to Get Trigger Leads Bill Passed in 2025. So let's talk about what a trigger lead is. A trigger lead is whenever you as a consumer are applying to get credit or debt for either a car loan or a mortgage loan, there are the credit bureaus that will take our consumer data and they will sell it to the highest bidder. That's basically a trigger lead. So you'll have mortgage lenders. There are a number of companies across the country that have made this part of their business model, where they will purchase lead lists from bureaus like Experian, and Experian is basically giving them a list of consumers that have recently had their credit pulled, a hard inquiry on their credit specifically related to a mortgage. And then what they'll do is they will bombard that consumer with unsolicited text messages, unsolicited emails, and unsolicited phone calls. And they may even lie, and they may say, hey, this is John with your lending team for your mortgage with blah, 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 blah. I have been assigned your file and I wanted to connect with you about your mortgage loan. And they will try to take the deal or steal the deal from whoever the originating loan officer was that actually brought in that opportunity for themselves, for their company, so on and so forth. So there's been a lot of talk about how shady of a practice that it is, and it's also very invasive for consumers. There's a couple of ways that you can get around this. There's a website that's called optoutprescreen.com. Again, that is optoutprescreen.com. You could have all of your clients go to, or you yourself can go in there. You put in some information for yourself, and you choose to opt out of any of those pre-screened items for, I believe, up to 5 years or indefinitely, whatever you want to do. So that's one thing that you can have your clients do on the front end whenever they're shopping around, so that they're not getting blown up. I have clients that have received up to 50 phone calls in a single day from trigger leads from other lenders that are buying these lead lists. So this article is going to talk about really the steps that organizations in the mortgage industry are taking to try to eliminate the legality of trigger leads and make them illegal in some capacity. So the highlights from the article are that the trigger leads bill and industry concerns. The proposed trigger leads bill aims to restrict credit bureaus from sharing borrower information without consent, targeting unwanted solicitations, which we just talked about, like calls, texts, and emails. Mortgage industry advocates view this as a necessary step to protect consumer privacy and improve borrower experiences, which I definitely agree with. It says legislative challenges and progress. Despite passing unanimously in the Senate, the bill failed in the House due to procedural and policy concerns. However, its bipartisan support, with 93 House and 44 Senate co sponsors, positions it strongly for reintroduction in the 119th Congress in 2025. Optimism for 2025 is that mortgage trade groups remain optimistic about passing the bill next year. Advocates point to its Senate success and the rapid legislative progress in 2024 as a foundation for building further support. They believe pressure from consumer advocates and industry stakeholders will help overcome resistance. Personally, I think that this would be a fantastic thing for the mortgage industry, more so for the consumers, because I mean, I'm sure you guys listening, you probably already get so many spam calls and random text messages and people that are sending you messages saying that you have a parcel that's available for you that's supposed to be delivered by the USPS, but it has an incorrect zip code and they want your information when you don't even have a package with them. So I think this is going to be great. I'm really optimistic. I hope that at some point in 2025, with the new administration coming in and the House and the Senate changing a little bit, that possibly this would be able to get passed. I think it'll be huge for the industry on the lending side and then also for consumers. But let me know your thoughts. Let me know if you guys have had any clients that have complained about this, during their time trying to get approved for financing and purchasing that new home. So that's going to do it for this week's episode. Short and sweet. I appreciate you guys. I love you. Thank you for tuning in. And I hope that you have an amazing new year. We'll see you next week.